Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. It's not changing. It's always a black screen. Give me a second here. What's going on? Let me switch that way. Now it's working. Welcome to the Foundation for the Study of Cycles. Thanks for joining Cycles TV. This is live. This is not pre-recorded. My name is Lars von Thienen, and we have Monday, same time, same place, 6 o'clock in the evening. Elliot, I see you. Yes, let's at the end I will pay attention to gold. It's a valid question. But for that session first, I want to update you on the long-term cycles on the US stock markets, because I always told you in the past episodes that we are an important time to watch out what happens to price. And therefore we need to close the look at it and pay attention to it. So I will share some charts with you. I will update you on the long-term cycle here. As I said, you should follow that on your own. So the first 10 to 15 minutes, let's discuss cycle status quo long-term in the US markets. I think that's very interesting what's unfolding right now. At the end, I will update you on gold. You are live, Elliot. That's a valid question. So everyone who's joining live will get the chance to throw in something to do live here. So let's start with the US stock markets. Where do I start? Let's start with some long-term cycles. And by talking about long-term cycles, I want to move back to you or together with you to first check a long-term cycles model, which I'm still following and we need to pay attention to because it proved us for a very long-term guidance here. So this model goes back even beyond the year of 2000. I published it first in the year of 2021, so 2021. October, there's an article at last.cycles.org. You can follow our blog there, but that's not the point. I want to make the point here that we had 3 long-term weekly cycles, which I highlighted here. 380 weeks, 180 weeks, and 143 weeks. That was the long-term model it was based on, and the important topic, anyhow, is here. At that point, we are now approaching the possible bottom area. That's also what I told you. We should look out for a bottoming cycle end of this summer, which we are approaching now. And we need now to rule out if we are approaching this cycle bottom now, or is there more room to the downside and it has not ended yet. So that's why I want to refer to this long-term model. And I will start with checking that long-term model and especially look out for the 3 cycles mentioned here: 380 weeks, 190 weeks, 140 weeks. So let's therefore move to the weekly S&P. Let's first clean up the chart here. So that's the weekly S&P 500. Current status quo here. And we clearly see, and this is what we are monitoring now for a longer time, the 180-week cycle. Maybe you have in mind, this is the same cycle we have seen 2 years ago. I published this October 2021. 2 years ago, there was the same cycle. It was 186 weeks. So it now shifted in length to 180 weeks, but we can count this is the same cycle we are talking about here. So let's activate this cycle here. And this is exactly what we need to rule out. So it looks like we're in the bottoming area, but we don't know really yet, and we have not confirmation yet that the upward swing has started. So this is what I'm repeating here during the last weeks. We need to identify when this bottoming area has been left to the upswing of that cycle phase. And therefore, we need now to pay attention. And therefore, I always said the bottom can also rule in late summer, not early this summer. And if you just look to the equal weight S&P 500, the picture looks even different. I just did it a minute before. So what you see here is just the equal weight S&P 500 index. And you see where we are trading. So we are close to the yearly low. So that's this level here. So this level here is the yearly low. Yeah, and so it seems like we are close to approaching, yeah, the yearly low in the equal weight S&P 500. So just taking out the capital per stock, so we are close to the yearly low again. Yeah, and that's what I always said. Let's be careful here. We don't have confirmation yet that the upswing cycle is in force. And in order to cross-check this, we use the concept of future line of demarcation. So if we use the FLD with 180 weeks, we apply the FLD, we shift it forward by 90 weeks, and that's the green line, which we are seeing here now on the screen. And this is what I'm really monitoring here. The resistance level we are now watching closely is what I'm highlighting here with this red line. So in order to get a confirmation that the next upswing cycle or this upswing cycle here is in force, we need to get confirmation by crossing the price, so the blue line here, above the green line here. Only if that happens, we have the confirmation in place that we are now in this upswing cycle of longer term cycle. If we stay below that green FLD, we don't have confirmation, and that then might result to the fact that still a longer term downward cycle is in force, yeah, and is overruling this 180-week cycle. And that's what we're monitoring here. So if we don't see a sharp breakout to the upside across the green FLDE, we might see the situation that there's still room to the downside into late summer. I think late summer has not ended yet. Based on a longer dominant cycle with some downward phase. And now if you see me talking about a possible longer cycle than the 180-week cycle, guess what? That's the reason why I referred to that long-term model here. There is a longer-term cycle also from that picture here, around 380 weeks. Yeah, that is another longer-term cycle, which needs to be taken into account. So therefore, let's switch back to our cycle analysis from the current situation. I will remove the FLD. And you see here in the spectrum analysis at the bottom, there is the longer-term cycle now shifted to 373 weeks. Yeah, you see it in the spectrum, you see it in the table. It is highlighted by our artificial intelligence supporting tooling, which gives you a clear view that cycle should be used. So the long-term cycle of 380 weeks now shifted to a length of 373 weeks. And that's the beauty of dynamic cycle analysis. We don't need a static cycles model, which we always try to fit in. we are always able to reassess the market dynamics and get a clue on the current active dynamic cycle in regards to length and phase, because cycles are not static. Cycles are dynamic. They shift in terms of length and in terms of phase. And that's what we're doing here with our cycle analyzer. We are not assessing static cycle models, like the nominal Hurst model, which is a static cycle model. We are accessing the current market dynamics and get the real length of that cycle, which is 373 weeks. Once we know that length, we can cross-check if that falls into the nominal cycle of 380 weeks we've seen 2 years ago. Say, yes, it's the same cycle. So it's just slightly changed the length. And by that, we can now apply the current situation of that cycle. So I will now also take into, let's switch off the 180. And let's just switch on these longer term 373 weeks. And that's what we see now here. And that's what I said. If, let's even make it larger here. If we don't get confirmation on the 180-week cycle, if we don't see the breakout above the FLD, if we don't see that, we have not the confirmation that this upward phase is in play. That means that still this long-term downward phase is in play. And this is stronger than the 180-week cycle. That's what I'm monitoring from a long-term cycles model. And up to now, this seems to be the case. So this upward swing here, I mean, by the way, it's only visible on the S&P, or if you take into account the Magnificent Seven, if you take out these 7 stocks here, or just use the equal weight S&P, this strong upswing here from April to July is even not visible on the price chart. But anyhow, the key point here is, if this long-term cycle is still in play, and I even showed you 2 years ago that this is an important cycle to watch, and if this cycle is now stronger than the 180-week cycle, then this means this downward phase could continue through the next year. Or another scenario, which is also valid, if now this downward facing long-term cycle, and you know that the 180-week cycle is now pointing up, they could phase out each other. So what you see in the current markets may be that you have some short up and down moves, but the range is quite small. So we just see sideways moves. I mean, maybe with a maximum range of 10% from the low to the high, but even it's hard to trade because you always only know after the fact. And it's maybe just related to some stocks only, not the broad index here. So either we could see a longer term, maybe though for the next 12 months, more just a small range with sideways movement of the broader market indices. By the way, like we are seeing here in the Russell, and not the Russell, the equal weight. So I mean the range you see here, which started now this year. So that's the range from 150 to 140. So this is a very, very small range we are talking about here. No? So downward, upward, downward. So even it's from 140, 150. It's even 7% range. Hard to trade anyhow. So you get more, and the 10-year in treasuries. It's more easy than trading this market here. But this could be the result of now the upward phasing 180-week cycle and the still downward phasing cycle since 2000, the year of 2021, 380-week cycle. Yeah, but maybe I go over my analysis here, which I wanted to share. So that's the key cycle to watch. And I think I made the argument here, which I would recommend you to watch. This FLD line is the most important now to watch here, which is now close to the real price. If we see a push above this, then the situation changes, and that's important to watch. In order to get a better clue what happens here, you know that I always recommend to use now some technical verification and tuning technical indicators based on the dominant market cycle, so the 380, 180 week cycle on the daily chart could give you a clue on where we are. So for a moment, let's now switch to some technical charts using the cycle length we know from the cycle analysis and check that situation on the price chart. Let's take this into account. I will explain these trend lines you see here on the top in a moment. I just want to refer you to this key indicator you see here at the bottom. So this is a RSI indicator so the basic analysis is an RSI with some dynamic behavior. You see the upper and lower bands are adaptive, and the adaptive calculation is based on the cycle length. So this indicator takes two cycle lengths into account. It takes the weekly cycle length of 180 weeks into account, and the daily cycle. So it's a combination of two cycles. And if the weekly cycle is in alignment with the daily cycle, you see it's colored, the background color is even light green, which means that it's a bullish reading. Or if the weekly cycle is in alignment or indicating an end of an upswing cycle, it's highlighted by the light red background here. So what we're looking for in general is when we see from the daily behavior, so a crossing from below the lower band to the upside in the areas of green background. So that was the situation in June and October last year, and then no other change. Or when we cross from above the upper band below the upper band. So that was the situation in November, and here also in September we've seen this situation coming up in the second half of 2021 based on that cycle, and then culminating into end of 2021. You can go back even longer here, but I don't want to do this historical analysis. What I want to point out that from a short-term perspective, for sure, we are now quite below the lower band. But to issue now positive buy signal, from the ideal scenario, you want to look out for two situations come into play. First, the longer-term perspective should support a bullish situation, which would be highlighted by a green background, but we don't have any green background here. So the longer term cycle does not indicate a bullish situation. And the short term, so the daily time frame signal will only be triggered if we cross now from below the line above the line. So now we need to look out. That has also not happened. We just pushed below that line here. So this is not yet a bullish signal here from a technical situation. It's even more dangerous. Because once we push below the lower band here without having a green indication here, when this situation happens, this is even an indication of a possible more aggressive down move here, which let me cross check where we had that situation. For example, let's go to the February 2020 situation. We you see it. Or bring it into the center and even zoom in. So you see we pushed below the lower band at that price level here. Yeah, you see it on top on that price level. And we didn't push up again from below to the upside. So once we push below the band, you also need to really be on high alert that it could be trigger a very, very negative follow-through momentum to the downside, yeah, which happened at that point in time. So the push below the lower band is not, and by no means, an indication about a bullish situation here. Only once we cross above from below that line, yeah, which happened at that point in time here. So the trigger we're looking for is in the ideal case also with the green background we have here. So at some points in time, yeah, you see it here. We pushed from the downside above it, but without this green background. I mean, this was a short-term move to the upside, but not a real long-term trade here. So this filters out really wrong signals here. So only once we see the push above with the green background here, which then triggers a longer move. And that's the exit here. That's not another short. That's only the exit signal of this long trade here. Yeah, is there another? Yeah, same here maybe, for example. Yeah, so we crossed below the lower band at that point in time here on the price chart. But by no means this was a positive buy signal, yeah? So a lot of negative momentum followed afterwards. So that's why, even though it looks like we are oversold from the technical condition, this is still pointing down, and we also could see more follow up to the downside. Or if we turn up now and cross then above the lower band, then the trigger to at least a short-term upswing would be indicated. But that's what I'm saying. Right now, even if we have a technical oversold condition, from the cyclical reading, long-term and short-term, a bullish trigger has not yet issued. Could be even more problematic that the bottom has not been reached yet, and the late summer period or the October period could become problematic for US stock markets. That's it, 20 minutes current analysis at a very important time in the markets. So now let's get back to your questions in the chat sections. I will get back to gold, Elliot. You will get it, but I see Fabio, you have some questions on what has been used here. First, you had one question on detrending. So in the cycles application, we always apply detrending. You can disable detrending, but so we don't use Savitsky-Golay or moving averages. So I think this is not a technique for detrending. For detrending, the key algorithm, which is still the best for this long-term detrending, is the Hodrick-Prescott filter, HP filter, Hodrick-Prescott filter. So you can read about that if you're interested in detrending. Yeah, wavelets, SSR, singular spectrum analysis. My research shows that these methods are not better than frequency analysis. But if we use frequency analysis, we should not use the simplistic Fourier analysis. That's too simple. There are better algorithms in spectrum analysis, and we are using the Goertzel discrete Fourier transformation, which I have a special course on that. So no, I don't think singular spectrum analysis is better, or wavelets, they are not better, at least in my research. The Goertzel Fourier analysis still outperforms these approaches. Fabio, but just quick answers to your questions. So now, Elliot, let's look into gold for a second. So let me prepare the chart first. Give me a second to clean up my screen and ramp up gold. Give me a second, please. Gold. So let's use the gold futures for the analysis. Let's share the screen now. Here we have the gold daily futures. That's the basic analysis. Anyone would start with the cycle analyzer. So let's just start the basic analysis right from the start. It's not easy to spot the most important cycle here. So the cycle which is recommended for usage is the cycle with the length of 104 trading days, which is being used here. It's a shorter term cycle. There seems to be something in play also from the longer perspective. So we have two possible cycles with the length of 230 and 365 days. But I would not recommend to use them because the visual shape of the spectrum here, there's too much a plateau-like topping here. So it's too flat, yeah? So the peak here from the visual shape of that peak is too flat. So you can't really get the real cycle length here, which is somewhere between 320 to 390 maybe, but it's just guessing. And then the right arm or the right shoulder here of that peak is not coming down enough. So it's not a sharp peak in the spectrum. So I would disregard these two cycles, or otherwise you have some more longer confirmation here. Even our cyclic analyzer would not recommend that. So let's just go with the cycle with the 104 trading days, which is a quite short cycle to use here. And I think in the current situations, it's out of sync anyhow. So from the daily perspective, this short-term cycle here does not really give us any clue right now, and I would not recommend to use the longer cycle. So that's also often the situation you can come up with, that the cyclic picture is just not clear. Yeah, we don't have a forecast or situation which gives us indications. So we don't get a weather report here. So the weather report is just maybe some rain, maybe some sun, maybe some clouds. We don't know, but you will get something out of it. So don't use the cycles in that situation for any projection. And don't force a projection into that. What I'm doing if I see this kind of picture, I think we need to stay away from trying to force something. So I want to find a cycle which is currently valid. We don't see it yet. So I think we should not cycle analysis in these times, at least not on the daily model. You use the pre-configured dashboard. Yeah, we could also use that. So if you just use the pre-configured dashboard, I think it's similar, not quite the same, but let's do that. So I've just opened not the futures contract. I think this data is coming from Quandl. It's a spot price of gold, I think in London. But it's also latest data here. We see more or less the same cycle, which had 104 trading days, I think, on the futures, which is here 99 trading days, which is the same cycle. Yeah, so that's the most valid short-term cycle. The picture about the longer-term cycles here about 320. So you've also seen this on the other chart. get a little bit clearer here, yeah? So, you know, so the shoulder to the right side is going more down than on the futures contract, but it's still flat on this longer term cycle. So still the same applies to these two peaks here. They are not perfect. They are better, and you see even in the cycle analyzer, they are highlighted here as key cycles. So let's deselect the 100 trading day cycles because, as I said, it currently seems to be out of sync. But in the past, yeah, it has some nice turns. So, but let's not use it. If you want, but this is a risky model. If we just use these two cycles here, so as I said, the 200 trading days and the 312, looks like we are at an interim low. I think that's anyhow what I told during the past weeks here. So this could become a bottom within gold. But as always, and the same applies, or the same rules now need to be applied what I'm doing for the stock markets here. It's now hard to find, or the key question we need to answer is, when have we really found the bottom and are then moving into this upswing cycle here? But as said, I would be careful with this upswing projection here, because we're using two cycles which are not quite good from the validation of these cycles using for projection. So that's the daily model. If we want to use the weekly, that's why I think I use the futures contract with data from Yahoo Finance. No, that's not the, I was wrong. The futures model. That's the futures model here. And now let's use the weekly. That's the weekly model in gold. The only one is here the 250 weeks. There are a lot of shorter term peaks here, but hard to use because there are too many of them. There seems to be a longer term cycle even though, so you should switch to a monthly cycle analysis. But if we go with this weekly cycle, it also confirms that we might see an upswing here, but it's not a perfect cycle analysis. I think we need to, or you should spend more time. As said, the cycles are not showing up as perfect cycles in the spectrum. But Elliot, I hope it gives you at least some ideas what you can follow through. Okay, so looking at your question, and we just announced the session short before we started. So that's it for today. Spending some time on the long-term cyclic situation on the US stock markets. I hope you know what to watch for. I will update you here week by week because that's key now to monitor. Gold cycle is not really useful at these times. Yeah, and in regards to the detrending, Fabio, Roderick, Prescott filter, I would recommend to use that. And for monthly data, that's true. You should upload that data manually, but maybe why not bring this from my perspective for next week? Let me think about it. Maybe I can prepare some monthly long-term analysis on gold. And FIA, the intraday analysis is something I wanted to follow up with you. That's correct. The situation on the US stock markets has not changed, but you're right. Let me think about next week to do a more fine-tuned analysis on the 2-hour, 4-hour chart in the S&P E-mini futures. I wanted to do that, but we need to shift this to next Monday. I hope you excuse EFA. Starlord, where do the red and green bands come from the RSI analysis? Maybe you're referring, I think you're referring to that indicator here, right? Otherwise, Star-Lord, please add to the chat section. So I just try to outline here. That's more or less just looking at the higher time frame. So this is a daily, this is a daily chart we're seeing here. And it's indicated in green when the weekly cycle is indicating a possible bottom. So the indicator, so the red indicator line is just using the daily calculation, from the daily data. But the background indicates where we are in the weekly cycle. So we could see that if we switch to a weekly chart, just switching from a daily to a weekly analysis. And here I use the same information. So here the background is now also using the weekly. You see when the indicator is below the lower band, then it's shown in green because that's the situation you look out on the next lower time frame for a move. So that's simple. So when on the weekly chart we are below the lower band, it's green. When we are above the upper band, it's indicated in red. Quite simple. And these background coloring is then transferred just to the daily chart here, which helps us to fine-tune the trigger. So when we see on the daily chart now a trigger, so a move from beyond to the upside, in the period when also the long-term cycle seems to be in that situation, then we get both confirmations. It's just, I often refer to, it's just an RSI indicator. It's just fine-tuned by using cyclic information now, tuning the length, tuning the bands to be adaptive and bringing weekly and daily into account. So this is now rolling over our knowledge from cycle analysis to a technical indicator like the relative strength index, Star-Lord. That's the basic information. You can find more information. Even the basic indicator is free. So I offer that trading view indicator. I scripted it. It can be used by anyone, the simple version. So I don't make a deal out of it. You can use it. I just want to go into the details here because that's then more on technical analysis. Bonds, Andrea, you're right. You see me here writing. So I still have open the intraday analysis on the E-mini and the bonds. I wrote it down. So please excuse, we talked a lot of times on these two. And I will keep the piece of paper here in front of me. So the latest by the preparation of next week, Monday, I will try to bring it up. I promise, Andrea and Effa, to bring this into next week's sessions. Okay, that's it for today. I hope you liked it. I hope you have seen something which inspired you to do some follow-up analysis. Thanks for joining me here in that session. And I hope and I would like to see you again next week. Same time, same place. Let's use some time on site.